these two candlestick formation are high probability trade candlestick pattern. And in this video, I'll be sharing with you these two types of candlestick that you need to implement and see how it will turn around your trading journey. So, what are these two types of candlesticks? I'm going to show you the two types of candlesticks, how you can identify them, and how you can apply this candlestick pattern in a simple market scenario. There are different types of candlestick, ranging from the engulfing candlestick pattern, the doji candlestick pattern, the morning star, the evening star, the pin bar, the hammer, then all the way to two combination candlesticks, which will begin to give you tweezer top, railroad track, and whatever you can name it. But all of this candlestick is summarized into these two types of candlesticks that I will be sharing with you in this video. Now, what are the two types of candlestick we are talking about? We are talking about the bullish and bearish engulfing candle. That is one of the candle, the bullish candle, and as well as the bearish engulfing candle. And then the second candle we are referring to is the pin bar. The pin bar candlestick formation. It can either be the bullish pin bar or the bearish pin bar. Remember, you are using the bullish pin bar to make your buy entry, and you are using the bearish pin bar to make your sell entry. So, in a way of illustration, let me try to highlight what an engulfing candlestick is for you, and then I will proceed to show you this in a real market scenario. So, in a real life scenario, you realize that you have a candlestick formation this way, right? You will see that first you have a bearish candlestick formation. In instance, you'll be seeing price coming down this way. Price will be coming down, and coming down. So these are candle formations, and then coming down. Then the subsequent thing you will notice is that a bullish engulfing candle will now form, a green candle, and will reverse this way. So what is your observation in this scenario? You realize that this bullish candle, which is this green candle, crosses above and cover completely the body of this previous bearish candle. So this red candle, which is a bearish candle, was covered completely by this green bullish candle. So in this type of scenario, we call this green candle a bullish engulfing candle. So this is a typical bullish engulfing candle. It's a scenario where this candle engulfs completely the body of the previous candle. So in terms of a bearish engulfing candle, you realize that price will be moving this way, price will be moving upside. You'll be seeing bullish candle formation, and then suddenly you will get a bearish candle formation, and then this bearish candle formation will cover completely the body of the previous bearish candle. So that is why we call it engulfing. Okay, so we have illustrated a bullish engulfing and a bearish engulfing candle. Now, a bearish pin bar is almost the same thing as this. What is the difference? In a bearish pin bar, you see price will be going this way, and then you have a candle body like this that will have a very long pin. Okay, you have a candle that will have a pin this way. So this pin, which is this rejection, will be 2 to 3 times the body of this candle. To make it clearer, you will be having bullish candle, bullish candle, bullish candle, bullish candle. Then suddenly you have a bearish candle this way. And this bearish candle in this instance will have a pin, which is a rejection towards the upside. It will have this rejection towards the upside. So this pin rejection is almost 2 to 3 times the body of that same pin bar candle. And that is a valid pin bar. So if your pin bar, if the pin of your pin bar candle, this pin you are seeing, if it is not up to 2 to 3 times, it is not a valid pin bar. It is not a valid pin bar. So it won't form part of our entry signal. And the opposite is for a bullish one. You have a candle like this, and then you have a pin like this. So this pin you are seeing here must be, this zone here must be 2 to 3 times this body of the candle. So having established that, let us now go into the market to see how we can apply this to our real trading scenario. Remember, previously we've done how to mark our support and resistance. Now, having marked your support and resistance, because we have done that in our previous video, I'm going straight into marking the point of resistance. So here is our resistance zone. So we have marked our resistance zone, and I am coming to mark the next zone now is our support zone. So if you look at this zone carefully, you realize that this is actually a support zone. So now that I've done this marking and we have identified this zone, to know what each of these zones represent, what is the next thing that we want to do? The next thing we want to do is we want to identify the behavior of price in this zone that we have marked. So it is important for you to see things this way. That first, this is your resistance zone. Price touched this place the first time, right? And then the second time, because we are marking, if you watch our previous video, we discussed extensively how these zones can be marked. And we agreed that this zone is being marked as a zone and not a line. And I will be marking the last bearish candle as our resistance zone, this bearish candle. So we will be marking both the high of that last bearish candle and the low of that candle. Any candle that is high from that peak there, we are going to mark the high of that candle and the low of that candle. I will extend it into the future. So that was the line we extend here. So by doing so, we are no longer marking our support and resistance as a line, but as a zone. And look at, in this case, we are going to mark this one here and then mark this one here. So we are going to correct this markup in order to show that we did not mark this as a line, but rather it is being marked as a zone. So our support and resistance must always be marked as a zone instead of marking as a line. So having established that and having marked this zone of support and resistance, look at, in this scenario, price pull back here and retest this zone. So you can see that price tap into the zone that we marked, which, so when price tap into this zone that we mark, what is the signal we are looking for? Remember, when price was coming up here, price was actually bullish. So you can see bullish candle, bullish candle, bullish candle, bullish candle. So because price come into this zone, you are not just going to sell. Many people are making this mistake. Price will just come to their resistance zone, the next thing they will sell. My question is, how do you know price will sell before you are selling? This is a visual market. It's not a physical market where we see what is happening, but by understanding the candlestick, we can interpret what exactly is happening in the market. And how do we interpret this? Is by having adequate knowledge. So now, since I know the price has come to my zone for me to sell, I will now need a sell confirmation. Not just because it's a sell zone, I will sell. Price is in the zone now, yes, that is one. What is my sell confirmation? What is that thing in the market that is telling me, oh, it is time for you to sell now? There is presence of a sellers now. What will tell me is a candlestick pattern. And in this case, what I got was a bearish engulfing candlestick pattern. So you can see how this candle engulf the previous candle. So you can see what happened here. That is the bearish engulfing candle. The red candle you are seeing here is a bearish engulfing candle. And after the formation of that candle, you can see how price sold all the way to this downside. So how do I sell? I will sell in a simple way. Immediately I got that candle formation, I will now make my sell entry. I will sell at the close of that candle, and then my stop loss is at the high of this zone. So here will be my stop loss, and then your take profit will be somewhere here. So you can see how that trade plays out beautifully well. So you can take note of that and of how the price plays out. So you can see that it plays out well, and that is beautiful. What is the next thing? Price came down here and hit. Previously there is a support zone here. So that zone is a support zone, and look at what happened. Price pulled into that support zone by selling. So when price come to your support zone, you are expecting price to go up, which means you are trying to make a buy entry. But the answer is, how do you make your buy entry? Will you just jump in? The answer is no. So you will need a confirmation for you to buy. And in this case, look at the candle we are having. We are having the bullish pin bar candle formation. So that candle I cycled here is a typical bullish candlestick formation. And what does this candle denote? This bullish candle is showing you that it's a red body candle. When it comes to candlestick understanding, you don't work with the color. I can choose to change the color of this candle to black, to any color of my choice. But remember, I told you that a bullish pin bar will always, the wick, which is the rejection part, will be 2 to 3 times the body of the candle. So even if the body of this candle is red, which is bearish candle, no matter how you want to interpret it, but as this wick, which shows the weakness, inability of sellers to take price to the downside, is up to 3 times the body, it becomes a bullish pin bar. Including this pin bar you are seeing here, this is a bullish pin bar. So it is not about the color, it is about the understanding of price behavior. Look at this candle you are seeing here, this particular bearish green candle you are seeing. This is not a bullish candle. This is a bearish pin bar, because it's showing the failure on the part of the buyers to take price off and the strength of the sellers. So when price now gave me this formation, I will now buy. So where do I buy? I will buy at the close of that candle, and then my stop loss is below this place, and you see how it plays out beautifully well. And then again, from there, price returned into this resistance zone. Look at here again, it gave us another bearish pin bar. So you can see, from that confirmation again, I am going to sell. And you see it came all the way down into this zone. And in this zone again, it gave us a bullish pin bar. So you bought again, price came to your resistance again, and in this resistance we are having this engulfing candlestick pattern. So that engulfing become our sell entry, and price break this support, and then price is pushing this way. So this is exactly how you will use your understanding of these two major type of candlestick pattern in making your entry. Now quickly, this is 4-hour time frame. Of course, your stop loss can tend to be long. So it is better you do your markup on a 4-hour time frame, then you step down to your 1-hour time frame to make your price execution. In that scenario, your stop loss will be very small. So you see, this is where our markup starts. And again, look at this bullish pin bar and then bullish engulfing. That is double confirmation. Look at here, bearish engulfing, and then that is it. So you see how price behave inside of this zone. Look at here. In this zone, we have a bullish engulfing candle, and when price get to this upside here, we have both bearish pin bar and a bearish engulfing, and you see how price respects this beautifully well. This is exactly how you can take advantage of this powerful candlestick formation. And I believe you have gained value from this video. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and please do not forget to leave a comment, and see you in the subsequent video.